The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 28th day of August, almost wrapping up the month. My pleasure to be here Monday through Friday, noon until 1 p.m. Dow is down 4 at 21,808. S&P is up 0.62 at 2443.67. Comp index down 22 at 62.87. The VIX index is at 11.64. It's up 36 cents. Still under the teens, in the 11s, under 12. Very important. That allows for some buying pressure. And what's really important here is that the E-mini is only up 25 cents. You can see that it made that high on the 8th of August at 24.88. If you're looking at my charts here on Tiger TV, on the left is the daily chart. On the right, in the middle is the weekly chart. On the right is the 120-minute chart. You usually have the monthly, but here I like to show the 120-minute chart because this is what I show my subscribers to my opening call. And what we've got is sell mode in the E-mini daily chart. I've got a sell mode in place for the weekly chart, but the price has really used up time more than price itself. So 24.88 down to the 24.19 area. That's 70 points. That's a lot. But at the same time, when you think of the pullback from that was March, the week of the 3rd of March, that was a little bit deeper and took a little bit more time. So far, we're really looking at time more than price. What's really important is that the parameters I can give you, 24.60 would be a breakout to the upside and suggest that we're going to go quite a bit higher. And a break below 20 is at 24.42 right now. A break into the I'd even say 24.32, 33 area says, H pattern for lowercase h pattern forming. We're going to be heading down towards the 24.20s or lower. So make it real simple. INDU. The Dow is at 21,807, is sitting under the 9-period exponential moving average, the black line. Let me move this away here so you don't need the 120-minute right now. Oh, the 120-minute, I meant to show the two U-shaped patterns that were forming with the right shoulder failure pattern. Well, we'll get to that. Meantime, the monthly chart of the Dow is in leg E with 3 days to go. And we've got the weekly chart at a peak D at 22,674. Nope. 22,179. What did I do there? I don't know what I did. 22,179. Is that what I showed my subscribers by mistake over the weekend? Yeah, 22,179. So this weekly chart is suggesting there's a down arrow, a Chapman wave 5. It's suggesting that there should be a pullback, but really until under the 21,000, I'm even going to say 21,600, we're going to make it 21,560 area. A close below that really sets in place lower lows and lower highs for the weekly chart to match the Dow. That'll be very important. In the meantime, any bounce that takes the Dow over 22,000, right here, 22,000, and 22,000. You just have to break above 22,000 would be very positive. I'm not sure it can do that, even though there might be end of the month buying and beginning of the month buying this week. Usually this is a positive week. Not good enough. I still think lower lows and lower highs, more time than price at this particular stage. Let me just go to the, I can't take that. That's a pity. So let me just do this. I'm going to go to the, so this is the 10-minute chart. It went to a peak D in Chapman wave. We're always looking for Ds and Es. This D stopped just under the 2449.50 level. I have to make this soft, excuse me. Oops, too late. There we go. Underneath the level of 24,490.50 that was made at 3:20 in the afternoon of the 25th, comes all the way back down to 24.36 area. Rallies this morning up to 24.49.25. Excuse me. That was 25 cents away from the left side high. I had typed in here, I'd shown a left side, right side price time match, and that went to the leg D, turned around, and from the day's high has pulled back quite sharply. And we'll see if there's going to be an H pattern bounce or whether it goes to like a lowercase m and then it fails. I think the way I'm looking at it right now, I think that we're in the chop, chop, chop sideways move. Now, what I said to subscribers over the weekend, so far, this is not bear market. This is not what you see in bear markets. Bear markets have the futures open very weak, usually double-digit down. All rallies tend to fail, and then the market closes close to the last hour, go close to the low in the last hour. What we've seen over the last 3 days, other than that big Tuesday spike, it's actually been for quite a while, but that Tuesday spike was very big. But Wednesday, Thursday, and Friday saw very last hour, in fact, last 5 to 10 minutes selling. That's usually not a good sign. That's usually a sign that there's some kind of exiting by fund managers, changing positions, but really getting out of positions, trying to hold them through the day. And yep, in the Dan piece says distribution in play. I look at it as a form of distribution, but most importantly, and now let's go on with the parameters. And I'll talk to you about this. There is still a rotational correction going on. The IBB is up nearly 7 points at 317. The semiconductors are not participating. They're not really acting very well. They're up 15 cents at 86.35, the SMH. But the IBB is up quite sharply. And that's part of this whole rotational effect that we've been seeing for years, for 5-6 years, that when there's a correction unfolding, the correction takes in place, the strength of the previous rally winners and the weak sectors and weak stocks, and allows the weak ones to have a bounce while the very strong ones continue to digest the big gains. So now let me show you. So the S&P has parameters, very easy. Above 24.52, that's about 9 points from here. That's kind of positive. And below, it doesn't have to go much below. It just has to go below the candle of the 24.36. Under 7 or 8 points down would be very negative. The QQQ series, holding quite nicely, but not great. Just holding quite nicely at 142.56. And at this particular point, a close below 141.70 would be very negative. And a push above 143.50 would say, hey, that's nice action. Not great, but nice action. If you look at the gold itself is rallying strongly. Up 13 at 13.11. Had to use the alternate counts, and I believe this is really a C going to a D. I don't think it's G/C. I don't think it's strong enough to call it a C, and that means that the weekly chart is going to a new leg E, and the monthly chart is starting to improve. This is very important, and I'll be back. We'll talk about it in a moment.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member, FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so Dow's down 13, S&P's down 0.50. Now, this is important. The gold is broken out, and if you look at the daily chart with the left side, right side price time match, it's extended from the midpoint, that's from the high of 1305.00 back on the 6th of June, pulls back to a low of 1210.2 on the 10th of July, runs back up, just misses the left side, right side price time match, this is Chapman Wave technique, misses it in price, it hits it exactly in time before turning down, then rallies, breaks out, that was an F/B. Today's breakout makes this, I'm pretty sure it's a C, not a G. So it's a C because the MACD deflected high. It usually allows for a couple of days of upside move or bars of upside movement. Stochastic is under 80%. That allows it to rally a little bit longer, and on balance volume is good. So I'm going to, at least for now, think that this is a brand new buy mode going to at least a D because of the way it broke out. But most importantly, and corrected here by one of our tigers who always looks very closely at the Chapman Wave notation, checks it out, also uses TradeStation. So 1306.90 was the peak C1, high on the 21st of, the 21st of, the week of the 21st of April. Pulls back, double tops at 1305.0, that's just less than 2 points below. That's called the Chapman Wave peak C2. That gives you a signal that says you can pull back sharply, and gold does, and it pulls back from the 1305 level right to the low of 1210.20 the week of the 14th of July, runs up, goes only to 1306.90 on the week of the 18th of August, which is parallel exactly to the high that was made back in April, week of the 21st. So that's, you've got a peak C1, C2, and this is really a C3 right here. And then you got the breakout today, which is leg D. Thank you for correcting me. That is a D, that's C3, but it's not. This is a D right here. So it's D in the weekly chart, and with very good technicals, C in the daily, and the monthly chart is starting to improve a lot. Still gray leg C, because it's underneath the previous peak of 1400. It was peak A- because it failed. Okay, silver right now is What do we got? We got leg C above the 200 period exponential moving average, and leg B in the weekly chart. Leg gray A in the monthly says, yeah, it's okay. Even the weekly chart says, yeah, it's good action, but still just okay because it's way below the 18.60. No, that was 18.786, high of the week of the 21st of April. Now, if we go to copper, and this is going to be really interesting, copper is at another new recovery high. Leg C at 3.066. This is the D in the weekly chart. That's the middle chart. The right chart is the monthly, and that is a leg D as well. This is really good action, and that's suggesting the world economies are not quite as bad as one would think. Now I'm going to do something else. I want to look at crude oil, because crude oil, even with this terrible flooding that's going on in the Texas area, is down 1.57 at 46.30. If ever there was a day that it should at least be holding, if not being up 1.59, this is very unusual, and it's telling us about a glut. And there's a peak C1, C2, and that has seen its sharp pullback, and the weekly chart doesn't look very good, neither does the monthly. So we've got to look at that, and then we've got to say, hey, wait a minute, what about bonds? Bonds are down 56 cents at 126.76. I'm looking at this, and I'm suggesting to you that this is, I've got it as a peak F potential today. I'm going to give it the day or two before I make, before I decide whether it has the potential for being an F/B with C and D to go, or if this is an F. Why? Because the MACD is still very good. The stochastic's at 88%. Everything's turning down on balance volume, stochastic, MACD, histogram, but they are all still very good. So you can turn down from being very good, but all it does is says it's turning down. It doesn't say that it's a big sell signal. So I'm watching this very closely. Why? Because my contention is if we're going to get a far more serious pullback in the market, bonds will probably go high and want to test the 128.57 high of the 26th of June. A break under 126 in the next 2 days says, hey, that's really weird. That means that that the market is holding up way better. That's really what I wanted to say. I think I've covered everything here. I think I've covered almost everything. So we're going to go. So a couple of questions came up. Two of them are exactly the same. What about RGLD, Royal Gold? Coincidence that it came within 5 minutes of one another. So Royal Gold trading at, hello, I don't want to be messed around. Don't like it. Royal Gold, there it is. So this is a recycle. This is now leg C, just like I did the same in gold. So Royal Gold trading at 91.15 up 2.41. Outstanding. Yeah, it's been one of the stellar gold stocks. It's just, and also I think it gets most of the money from royalties. This is leg C. I've got leg C. Now someone said leg B. Now I've got leg C because there was an inside buy. Look, you can't forget that. From the 24.68 low that was made January of 2016, it went straight up. And this is one of the most remarkable in price. It goes from 24.68 all the way to, in one leg, it goes to 87.74, peak A, made August of 2016. That's 87.74 because the next month was 86.93. Then it comes down, and it comes down to 60.21, December of 2016. Then it has a rally, and that rally goes to a peak A right there in February at 73.16. It pulls down, and that should be called the gray A because it's under the previous high. Then it goes to a gray B, and some of you might have missed that. You remember, you can't do that in Chapman Wave. Every peak and every trough has its place. That's the whole thing. It's one of the easiest techniques, but you can't be unfaithful to it. And then that B breaks above the high that was made at 90, was that 80? Oh, it was 87.74. And that becomes gray leg C. It really is a blue leg C because it's a brand new. So this is leg C in the monthly chart. That's very bullish. This is F/C right now in the weekly. And I'm really inclined to just call it a C. But I want to be faithful to the technique that says when the MACD is good, you can keep your standard notation. When the stochastic is very good and holding, you can keep your standard notation. I'm going to make this a leg C. Why? Because, if I can just get it, go back, there you are. Why? Because in this particular instance, we're looking at the technical so strong that if there was to be a pullback, that pullback has great support all the way to 85.73, the 9-period exponential moving average. So even if you gave it time, that would still be C. I'll change it to an F if I need to, and it'll go to an F. It goes into the 83s. But right now, this is very good action in Royal Gold. Royal Gold holding beautifully. I'll be back. Got a couple of questions here. And one statement, it was more than a question, it was a statement that said, that spread in the USO. Yes, the USO not looking very good. USO down sharply, down 30 cents at 9.45. Got repelled once again from the trend line resistance. Dow's down 34, S&P's down 3. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I knew I wanted to get to something, and I just got an email reminding me. The email itself was asking about JBHT, which is JB Hunt Transportation. I believe that's trucking. And it's doing really well. It's up $1.35 at 98.99. Monthly chart I've got as a B. I could call it an E, but gee, everything about it says it's a B. Now that there should be a new recovery high. That's a big positive. The weekly chart is in leg C. Needs to at 100 at 98.99, but it needs to get to 101. Is that 101? 123 and 102.38. Yeah, it's quite a bit. It's got quite a way to go before it breaks the upside resistance level. And the daily is in A, B. That's a real tough one. 98.30, 98.31. Yeah, that's in D. Leg D in the daily. Double check. Yes. So JB Hunt has, it looks like it wants to target the way it's acting right now. It wants to go higher. If it breaks 99.80 to 100.35, I think 103, it could really touch 102 to 103 quite quickly. If it's going to fail, it'll fail within 2 days, and you'll see it underneath 95.60. And right now it's at 99. I'm not sure that's going to happen. So yes, good eye. And Chapman wave methodology, I'm calling this, what did I say? This is a leg D daily, leg C weekly, and leg B, a peak B has been made in December at 102.38, and it's at 98.95. Has about 4.5 points to go before it breaks into leg C in the upside. This is good action, I must say. I was looking at the IWT. Why am I doing this wrong? ITW, no. Oh, Illinois Tool Works. IYT. The IYT, which is the iShares Transportation Average, and it was not doing very well at all. And if you look at the XAL, it's a little surprising when crude oil has been so poor. The XAL trading right now at 105.55 is down 59 cents. And I've been talking about this for a while. I've been saying something's wrong with the airline, the transport, the transport sector, airline segment, because it just plummeted from the 122 level to the 102s, and 20 points, 10%, when things should be so quite superb with oil so low. So something's going wrong. So IYT, as I said, is that one area. So you've got CSX. I like to look at CSX because in the transportation, you want to look at the rails, and the rails say, hey, we're the ones that are stuck. And that tells me that maybe commodity area is being impacted, not gold, but the other commodities that are transported. So this is very interesting because it's trading at 49.19, and it's really just stuck. And it looks to me over a period of time, it's going to break and go from 49 down to the 45s. So I think we've covered that. Now, the other question I had is Bank of America. We're always looking at the banks. That was a peak D. I forgot to put the down arrow there, right there. And Chapman wave look for Ds and Es. Made an E at 25.80 back in February. I'm sorry, that was March. At 25.80 comes down to 22.07. Goes up to a peak C, and now it's starting to fail in another arch. It's just trading between an arch formation and a cup formation. It's like a sine wave going up and down below the 9-period moving average. And so that says that we'll have to wait for a leg D above that 25.80 level. It might take a little while before it can get there. If you want to look at the XLF is trading down 19 cents at 24.62. So we have a small long position, still have it. I'm just trying to give it a little room here. I got a feeling it's going to fail. We're going to tighten that up very soon. So that's what we're looking at there. There was another question about, so that's bank XLF. I've done that. Royal Gold, we just did that. RGLD, yep, nice leg C. I'm calling you to see at 91.33 up $2.59. Did Paul, Baba. Alibaba Group Holding Limited, 169.30, down 244, made a peak F. I wasn't here on Thursday and Friday, I had a bit of a break. And what I was looking at over the weekend, I said to myself, woo, because I remember my son saying quite a while ago, he said, I like Baba, should I buy it? And I can't even remember if I said yes or hold off, or at the time I remember saying the chart looks very good, but I just can't remember whether I said to him yes or no. But it's done fabulously. And it's gone from maybe the 145s we were looking at, it's up 20% at 169. But I think that it made a peak F, at least a short-term top, at 177 round number. a peak F with a round number high, 177. RN, round number high. Hoo-hoo. Got to watch out for that. I'm making it red. Any break above 177 is very positive. Otherwise, it's going to be in a sell mode very soon if it tests that gap at the 167 area in the next 2 days. And it's a leg D in the weekly, only a leg C in the monthly, still very positive in the monthly. Yeah, so that was that question there. JD. JD.com. Oh, I had this all notated because once again, I remember my son asked me about this one. He had a whole thing about the Chinese sector, and I was looking at them, and I notated them all. So let's see if I can get this down here. I'll do it very quickly. So here we go. Lowest low bar, you immediately count each successively high. A, B, C, D goes to an E, pulls back sharply. The MACD does not cross negative decisively. Stochastic holds quite well, but I'm going to put a down arrow here, an up arrow here. Let's see if this is correct. And we've got the bar that makes the low cannot be the high unless it is Chapman wave instant restart. So this is your A, this is your B, this is your C, and we are at this particular moment looking at, whoa, a D, and then it goes, this is a tough one. How do I explain this? This is called the Chapman wave unconventional non-instant restart. There's a Chapman wave unconventional restart. Look, A, B, C. When that happens, and D within 3 bars goes to what is not just an E, it looks like an A, and it actually turns out to be correct A, and you can do this. The implication is that the price of whatever you're following is going to come down and test the low bar right there. That's why it's a fantastic technique, because when it works, it not only gives you a GPS, it tells you exactly where it's going. And it says that this failure, and I'm going to put a down arrow here at PD, after an unconventional flat base restart, should come and test 36.77 in JD.com. And this is a Chinese, it's an internet company. And what we're looking at 40.51, that means it's got 4 points to go before it tests the low. Doesn't give you time. It says it won't go to a new high until it tests 36.77. Whoa, there you are. You want to put your head on the block? That's it. When I get back, we'll look a little more deeply at KRE, which is a regional S&P.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, we're back. Dow's down 33, S&P's down 3. So I was asked about 5. Well, we did KRE, and my KRE just needs more time. I'm just going to hold off doing anything there. So I typed in for one of our dinners who had 5. This is 5 Below Inc. I think it's some kind, it's a discount store. And I had said it needs this area here, there. And I had drawn in a dashed line. It was down there when we were talking of the 48 area. Subsequent to that, on Thursday, it snuck above peak C and it went to a leg D at 51.74. So the daily's completed its D. Now it's pulling back, holding the 9-period exponential moving average. MACD's good. Stochastic's really not very good. Unbalanced volume is rallying, but not great. And I'm looking at this and I'm saying, okay, it's really struggling with this weekly chart. Let's see what I can do in the weekly. So the weekly chart has a declining trend line right here. Oops, right there. Put that up. There it is. And that says that if the, right there, if 5 is able to get to the 52.05 level, this week it'll be a leg C extension. Next week it'll be a peak. It'll be a leg D underneath the previous high, peak D. I'm looking at this and I'm saying, you know, I said before that if you're in early enough, this could have very whippy stair-step moves and then give back the gain, some of the gains. And that's really what I'm seeing. So I think it's a good position for looking out if you're holding it lower down and just manage the trade. Would I buy it right here at 50.04 down 30 cents? No, I think that this D it's going to take a little time. So I'm just neutral on this. If you are long, it's holding well. If you are looking to get in, I'm just going to say, even though the target should be the 54 left side highs that were tested back in March, I think March, April, I'm just going to suggest, for me, I just need time. I haven't got any confidence in a trade at this time. So NTLA was another question I had. NTLA is Intella Therapeutics. Whoa, look at this. Up 20% at 20.93, up 3.47. Really good eye. Good eye. We've got one of our dinners that has a position. I'm not sure what got you into this, but whatever got you into it, I'm just saying to you, great technique. It is a technique that says there are certain periods where a price just stalls in a sideways motion and it keeps knocking up against that resistance. In this case, Intella Therapeutics, isn't that, that should be a candy, right? In Teller. Anyway, Dell Therapeutics from the 1760 high of the 29th of June, it just keeps bumping until it finally makes its way to 1789, 26th of July, comes back again, keeps testing, and then pow, today, it's a great breakout. Good eye, good eye. I mean, I don't know what to say to you, but that's a beautiful technique. Why? Because if it sneaks slightly to highs, that's very different to if it was just trading and it had made a high and it couldn't break that high, because then the chances are you'll break the low of the rectangle formation. Now you've snapped out of it in a more than one-to-one extension to the upside. That's very positive. This is leg C, A, B, C. This is leg D in the weekly chart. So the monthly chart is really improved, and it's an IPO. So this is, if this is the start of a move, then it's in leg, I'm going to put this as with an up arrow. We don't know, but at least I like to start off that way. Up arrow in the monthly because it's starting to break out, and it's in leg B. Hey, bravo. That is a really nice position placement. Got in at, got in at 14 and it's trading at 20.95. I would say to you, bravo, bravissimo, in fact. That is really, oh, wait a minute. A minus A, B, C, D, E. This is either an F or a brand new A. I'm calling it an F, but there's nothing negative at all. So just, it happens to have a notation of F. Could still go to a G and recycle. So far, so good. 19.90 is the 200-period day, a monthly 200-period moving average. That's your first support, but I would say right in the middle, 19.13 is really some of that area. That's going to be key support. But at this stage, whatever it is, they had good news. Good news is being celebrated. Next question I had was VLO. VLO. Did I hear that someone was there online? No. Okay, VLO breakout to the upside. Let me do this steadily. I don't want to just make a stab at a guess here. Okay, there's your low in the weekly, back in the 46-ish area. And it goes peak A. There we go. A. B, C, D, E. Yes. Pulls back with the technicals pulling back and the price. Yeah, I'm calling this an A. Oh, I'm pleased I did the weekly chart. A, B, this is a leg C. This is very nice action. I'm not going to complain at all. I'm going to say to you, you've got a good eye. That was Julie. Good eye, and it's in leg. It's a peak A in the monthly. It's leg C underneath the previous high. Back in 2000, January, I think it was January the 6th, the week of the 6th, 71.40 was the high. Comes down to 60.69 the week of the 2nd of June, and now it's at 68.66 in leg C on the upside. And I'm going to give this a little exercise here. I wasn't here Friday. We'll treat this as Technical Friday for the Chapman wave. A, B, C, D. A, B, C. Oh my God, look at that. Oh, it didn't work. All right, this is a little tricky. I might have missed something. Let me do this again. Peak A there is on the 10th of July at 68.49. Pulls back to 68.45, and then it goes to 68.55. That's what I wanted to see. I knew it. Now, when you do this enough times, you just get to know where there's something that's just not quite right. 68.69, 68.83. Unbelievable how this works. So the Chapman wave worked again right there, and we've got a D and an E. And then it pulls back sharply, takes out the starting point. So this is to be, there's no other way to count it but an A minus. It has a rogue wave, false break to the upside. This was in fact accurate as a peak D. No, this was accurate as a peak D because the technicals were failing. Okay, so as it stands right now, I can't really call it anything else. because it broke all the support levels of starting points for peak for the up move, and therefore this has to be considered to be a B, C, and this is a brand new move, leg A. I'm calling it an A, but it could fail. That A failed. But at this point, at 68.85, Valero is what we were looking at. VLO, did I forget to say VLO in all that time? VLO acting very well at 68.85, 68.65. Must hold the 66.86 9-period exponential moving average support. I would even say it has to hold 67.60. If it takes that out, it's a problem. But so far, it's looking quite well. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Folks, don't forget, Steve Rhodes coming up. Great show, as well as Dave White, Tom O'Brien, full house we've got. So we're looking at the Dow down 32, S&P down 3 1/4. There are a couple of things I wanted to deal with here. A good question, so let me just deal with, so Bob wants to know about Home Depot. Is this a time to buy right now? Maybe sell TRV, which is Travelers. Travelers made a peak E back on the 16th of August. Pull back very sharply right to the 200-period moving average. I'm not sure that I want to sell it. I'd have to, when you're sitting on a key element, I would prefer just to hold off anything, wait for a bounce. You might miss a great opportunity, but there is risk because coming off a 200-period moving average, that's usually, the bounce is usually quite big. So I'm going to just say hold off. Good idea, though. And yet I'm not sure that the hurricane is going to fully change Home Depot's outlook. But I would say that at 151, If you want to buy it here, I would just put in a 2-point stop, a 2.5% risk, and I'd be buying some position here and just say, hey, go where you want to go. I've got my stopping place, because if you make the U-shaped pattern that we've seen so often, then you should be retesting at least the downtrend line in the weekly chart, which is you're trading at 151. It could go to 154.80, somewhere around there. I hope that helps. Now, the other thing is, within the context of the markets, I just want to mention one thing one more time. I've said this to subscribers over and over again. This is kind of negative action. And maybe you can say in some sectors it's kind of bearish. But this is not bear market material. You're not opening down double digits and trying to rally and failing and closing the other low of the day every day, with 3 times out of 5 sessions a week. This is part of the rotational aspect. And I can't do this right now. Maybe tomorrow we'll have a look at it. But if you go through the different indices, you will see that within that there are some stocks that are actually holding quite well and some stocks that are just terrible. My Dow Quartet, for instance, they've been acting very poorly. And look at GE right now. Maybe it's trying to rally a tad. Oh, no, it couldn't hold a rally. It's down again, 24.41. So I'm just saying be very selective here. Well, where are we? We are short 2 of the indices. And
Hi, folks. The 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.